Hey, what's going on, guys? This is Blood Phantom 81. Welcome back to my channel. I actually got this idea from one of my subscribers, so thank you K97 for that. Today I'll be walking through my gold miners portfolio and give some more color on price targets and things like that for most of the miners. I might not go through all of them. We'll see. But yeah, let's just jump right into it. So just to recap on my idea about gold, I do feel like this is the start of another bull run, and this is just the beginning of that. So all of this is contingent on gold holding at least 1050. So if prices go below 1050, which is around here, then I'd be a little bit more cautious and I'd be looking to get out, honestly. But either way, I'm liking the base of support that gold is forming around here. On the weekly chart, we got a bullish cross, so 50 cross above the 200 period moving average. Like I said, I do think this is the beginning of a new bull run. So that's exactly why I'm mostly excited about this gold miners portfolio. Short term, I will say that this looks like just an oversold bounce before continuing on to the downside. So we're seeing some resistance at the 50-day moving average, and we're seeing some resistance at 50 RSI. And this also looks like an oversold bounce, kind of something just to cool off the RSI before continuing on lower. So as we go a little bit lower in gold, I will be picking up cheap shares of gold miners. So let's go ahead and take a look at the portfolio. So in a sense, it's kind of ordered by market cap. Some of these stocks are on the S&P 500. I think Barrick's might be on it. I'm not sure about the rest. And they get as tiny as maybe in the millions of market cap. I think like Cisco is pretty small. But like let's just Google its market cap of Cisco Gold Royalty stock. Oh yeah, it doesn't even have it listed. So some of these can be pretty small. As you can see, some of them are taking a hit right now. And a lot of these are based in Canada, surprisingly. So we can even take a look at the M1 Finance sector of metals and mining. So this is exactly where I got the list. So it's in the sector basic materials and in the metals and mining industry. So I pretty much went through most of these. There's about 99 in total. And M1 Finance isn't going to have all gold miners that I liked, but it's definitely going to have most of them, and I discovered a lot of them. And my idea when I picked some, well, I basically had a few kind of requirements for them. Number one, they had to mine at least gold or silver. So if gold was in the name, that was probably a good place to start. This is one that I picked. This is another one that I picked. So that's something that I definitely watched out for. I don't actually like the other metals such as platinum and copper, even though they might be setting up for higher prices as well. That's not what my main focus is on. So that was one of the prerequisites. Number two, I wanted to see a lot of price depreciation over the last year. So I think I bought Cisco mines as well. Um, don't quote me on that, but essentially, $185 million market cap, not too big at all. And so it has definitely taken a beating in the last year in the same way that gold has. So from this period to this period right here, a lot of these stocks have taken a hit. So I wanted that just because I wanted to buy the dip in a sense. So that's something that I watched out for. The other thing that I watched out for was, I'll just give another example of AUY. This is probably my favorite one. In a sense, each of these gold mining stocks had to mirror GDX. So GDX is actually the gold miners index. And so what we see on GDX is a really strong move to start off 2016, and then a really strong retracement back until the end of 2016, and then this kind of sideways consolidation. Currently, we actually broke this low on GDX. I still think we can even go a little bit lower, so I'm totally fine with that. But the reason why I wanted these stocks to sort of mirror GDX is because that's where I see the most potential. If they didn't even show this strong move in 2016, then why would they show a strong move here when gold actually starts picking up? Or at least that's my logic. And I could be wrong about that, but that's kind of the strategy that I'm going for. And then lastly, the last requirement for these stocks is they had to be around from at least 2017. So something that started in 2014 or 2015, I didn't really like too much. So I don't think I added any of those. There might be one exception, but yeah. So let's go ahead and take a look at my gold miners portfolio, of which I have quite a few holdings. Like I said, a lot of these are really small, and I'm really excited about those. So let's take a look at AEM, Agnico Eagle Mines. So AEM, again, it does mirror and look a lot like GDX. Let's go ahead and take a look at a weekly chart. So AEM, the high in 2011 was around $84, and that's also something that I mentioned is the risk to reward setup. And I had, I got pretty inspired by the high in 2011 or 2010, around that range. Just because like that's kind of the ceiling that I would expect for this stock, at least in the near term, because this is actually when gold was at its peak. So I definitely take a look at the 2010 or 2011 high for a lot of these stocks to get a sense of potential price targets. So that's one thing I want to note and make important. So yeah, on AEM we got a bullish cross on the weekly chart, 50 cross above the 200, and so we're kind of just hanging out around here. Again, strong move here in 2016, currently at $36. So not the greatest price, price target here compared to the other ones, but I did like that this one was quite large in terms of market cap. So 8.6 billion. That's definitely a little bit larger than the other ones. Next on the list is AU, or Anglogold Ashanti. That's a funny name. So this one is also a $1 billion gold miner, which I liked. And that's kind of why I placed these at the top and I gave them a little bit more weight, such as 4%. So let's go ahead and take a look at AU. So AU is one of those that I did see a lot of potential for. So here we have the high in 2011 or 2010 of around $51. We got even higher here in 2006. The move in 2016 was pretty explosive as well, all the way from $7 to around $21. So that's a 3x return. So if we get the same type of move, I would expect something similar. And I mean, just look at how depressing this chart looks. And I love seeing that look, because this brings a lot of negative sentiment. And that's exactly the type of thing I want to see. So we barely crossed, we barely got the bullish cross from the 50 to the 200 period moving average right here, but then we crossed again bearishly. That's totally fine with me. I'm not expecting each of these miners to have that cross, but as long as the cross is in gold, then that's kind of where it matters. So essentially, use technical analysis on gold and then look for these stocks to get the most potential out of them. So yeah, my price target is anywhere around $35 to $40 if gold starts taking off. Next on the list is BTG. I've actually heard a lot about this one before investing into it, so it's definitely a no-brainer. So BTG is actually one of the newer ones, and I think this is the few exceptions for the stock being relatively young. So typically I like it before 2011, but that's fine. I heard a lot of great things about this one, good management and all that stuff. So the move in 2016 went from 76 all the way up to 341. So that's around 4x, 5x gain. We didn't actually retrace that much. So this one is showing a lot of strength, especially compared to the other ones. Some of them retrace as much as maybe 78% around here. But this one is holding strong support here at 234, which I find pretty impressive. So I definitely like this one. The other thing is the high here in January of 2017 compared to the summer of 2016 is actually almost like a double top, which a lot of the stocks didn't really make that cut. Like a lot of them stopped around here. So that's something that I really liked as well. So I had to take BTG. Next on the list is Barrick Gold Corporation, and this one is 12.4 billion, another large gold miner. Let's go ahead and take a look at it. So ABX I like a lot, and I don't mind that we saw such a heavy retracement. That's a good risk to reward setup there. So from the high of 2016, from the low of 2017 all the way to the high, we went from around 750 up to 22. So not the greatest risk to reward here. So that's something you'll find with the bigger miners, most of them at least, is that the move from here to here was maybe around 2x, 3x versus maybe 4x or 5x on the other ones. Um, but a lot of times well, I look at this one as kind of like a leader in GDX. So this is something that I'll use for technical analysis if I'm curious about the other ones, just because it has so much weight in GDX. Yeah, so next on the list is Franco Nevada. And so this one is FNV. I definitely like this one a lot. Not just for the name, but this one is showing a ton of strength. So this one actually is another exception. This one doesn't really look like the miners, and it's relatively young. But as you guys can see, a lot of the miners saw a really strong move from here to here, which this one did see about a 2x move, and then a heavy retracement. But this one actually went on to make a higher high and then a higher low. So currently it's holding support at the 200-week moving average, and it doesn't even look like a miner. So I definitely wanted to have a few anchors like this one in my portfolio, just because like seeing red numbers all day isn't exactly inspiring. So yeah, I definitely took the chance on FNV or Franco Nevada. Next on the list is GFI. So GFI is another $1 billion market cap one, 2.1 billion. Let's go ahead and take a look at it. GFI, another pretty simple one, mirrors GDX, has been around before 2011, that kind of thing. So yeah, the high of 2011 was around $15, and it's currently at 250. And the move from here to here was about 2x, maybe 3x or 2 point something x. So that's kind of another pretty good setup. Weekly RSI is way oversold, especially after this move. I don't think the other miners have shown a really bad week 3 weeks ago, such as this one. So maybe something happened with this stock in particular. But I love the setup. So from 250 all the way to $15 is definitely around 4x, 5x type move. So yeah, I definitely like this one. Next on the list is GG or Gold Core. You could probably guess what they do. So this is another $1 billion market cap one. This is even larger than the previous one. So this is GG. Pretty much the same thing here. It is a little bit more expensive in terms of price. It's definitely above $5, unlike most of them, or at least most of the smaller ones. And so again, weekly RSI is showing oversold conditions. Price action went from $11 all the way up to $22 from the move of 2016. So not the greatest risk to reward setup, but I did like how big this one was. Kind of like an anchor, low volatility one in my portfolio, and that's exactly as I would see it. Even though the price target for this one is around $55. If we're talking about the 2011 high, so that's definitely a 5x move. So yeah, it's all about having anchors as well. I definitely have some more explosive ones towards the bottom of the list. So next on the list is IAG, and I love IAG. I think I've been watching this one for probably the longest, and because it doesn't feel like a gold miner. In fact, like it feels more like a stock, just like a regular S&P 500 stock than the other ones. So as you guys can see, the move from 2016 went from 130 all the way up to 550. So it's definitely got that explosive quality. However, the high here in August 2017 was higher than the high in August 2016. So it's almost as if this one has a lot more buyers than the other one, or at least a lot more demand. And we even made a higher low. So I definitely love IAG. This is probably the one that I would recommend the most if I had to pick one. The 2011 price target was around $22, so that's at least 4x from where we are right now. And like I said, this one trades more like a S&P 500 stock than the rest. So if you do want exposure to gold miners, I would consider this type of move gambling, to be honest, because it's contingent on gold going up. But If you, yeah, like I said, this is probably the one I would go with if you had to pick one. Um, right. Next on the list is PAAS, Pan American Silver. I do love the silver type stuff. And so, Pan American Silver, one thing I will note is I think this is on GDXJ, which is the gold miners for the junior stocks. And so, junior stocks are basically a little bit more, a little smaller than GDX. And I think they focus a little bit more on exploration. So, PAAS might be on GDXJ, or I feel like it is. But anyway, so the move from 2016 to the high right here was about 2x or 2.5x. Currently sitting at 15 right now. This one is showing a lot more strength. As you can see, the retracement isn't as deep. So that's definitely something to think about is if it has a deep retracement, does that mean that it has a higher risk reward setup? Or if it doesn't show that much retracement, does that mean that it's a little bit more stable? Those are some questions you need to ask yourself, but I definitely wanted a mix of both. So it's about maybe 2x or 3x price target from here from the 2011 high. Definitely not the greatest, but I liked it nonetheless. Next on the list is Anglogold Resources. And I think this is going to be it for the larger ones. I'm probably going to start at the bottom after this one. Let's see if I can even pull it up on TradingView. Okay, maybe not actually. So I'm going to go ahead and skip that one. And then I'll start from the bottom. So I talked about AUY quite a bit. I talked about SVM. Um, yeah, let me talk about one that I don't like that much, but for some reason I still bought it, which is VGZ. So I bought this one. If you take a look at a weekly time frame, it looks like a total piece of crap. Nothing but lower lows and lower highs. But if you zoom in a little bit, so this is kind of the same time frame that I've been looking at for the other ones. So from 2011, the high was around maybe $4, and then the low here in 2015 was 25 cents around there, so about a quarter, and then from 25 cents all the way up to $2. So that's about an 8x return. Currently showing some retracement. So this was quite the deep retracement. So we're back at 50 cents. Weekly RSI is nearly oversold, but there's a lot of potential for this one if gold does start taking off, and so that's exactly what I'm talking about. So if we go all the way from 50 cents to about the high, actually, yeah, I guess it's not fair to compare it to this high, but if we go back to the high, that's nearly an 8x return from the high of 2011, which is the same metric that I've been using for the rest of these stocks. So that's quite large. So that's definitely why I like this one. I still took a gamble on it. AUY I mentioned. I think I haven't taken a look at Cisco. So Cisco is also a little bit odd. Um, the move here from where is it? Oh yeah, so this is the move from 2015 all the way up to 2016. So I pretty much took Cisco because of stuff I read about it, and that's definitely not the greatest thing to do, and I wouldn't recommend that advice. This one is also relatively young, but again, this is kind of like a call on management. And I feel like this one has a lot of potential in terms of exploration targets. So that's kind of why I bought Cisco, and not so much for the chart. So oftentimes I'll do that. It's rare that I do that, but nonetheless, I did it anyway. So this next one is NG, still a $1 billion market cap. So NG, again, this one is showing a lot of strength because it doesn't look like the GDX look that a lot of these other stocks have. So it went from around $3 all the way up to maybe close to $7. And then right now we're back to 374. So if you guys missed these price levels, then we're back near that again. The 2011 high was here around $15. So that's maybe a 4x, close to 5x, but not so much. So that's exactly the kind of thing I'm talking about. But none of them don't excite me quite as much as the penny ones. So this one is also 2.7 billion. Yeah, so if M1 Finance had a little bit more penny stocks, I would probably jump into them. I don't mind the volatility, especially because this account is for gambling. So that was kind of a recap of my gold miners portfolio. Again, I do not recommend getting into these unless you have money to throw around. And unless you're prepared to lose that money, um, there's been a lot of speculation about gold since 2016, and I know that there's been questions wondering if the bottom is in or if we're going to continue a lot lower. That's kind of the same mentality that we always have near significant bottoms. So there's a lot of uncertainty. There's a lot of fear in the market right now, and I think gold can go even lower, and maybe more people will give up as a result of that. But that's kind of the conditions that I'm looking for, and it's a little bit scary. It's definitely a bit of a gamble, but I'll keep you updated. I probably won't be making any more videos on gold or gold miners just because I don't want to encourage it, and I also um, I don't want to annoy you guys with that kind of stuff. But anyway, that's my gold miners portfolio. I hope you guys enjoyed the video. Let me know what you guys think about it, but I hope you have a great day.